part of a growing group of do-it-yourself traders who are trying to change the way investors think about building wealth. But because we don't believe in using financial advisors, stock tips, or traditional financial media, we have to do things different. We have to do things smarter. We do that through an art and a science we call trade hacking. At Navigation Trading, our methodology is based on statistics and probabilities, not hype or emotion. Our core strategies have been used by market makers, hedge funds, and floor traders for many years. Now, we share these secrets with you. Whether your goal is to make an extra $1,000 per month or replace your current income, with our guidance, you can achieve financial success beyond your wildest dreams. So, let's get started.
Good morning, navigation traders. Hope everybody had a great weekend. We are going to jump into our trade of the week, but first, a couple announcements. If you're not aware of already, we've just released our newest course called Winning Option Strategies for Any Market. This course is all about directional trading. So a lot of the strategies that we use at Navigation Trading are based around being delta neutral, more where price stays in a range, trying to collect that daily theta for those income trades. But we also like to put on directional trades a lot of times, specifically in periods of low implied volatility like we're in right now. So it's a great course, put a lot of time and effort into it. I think you're going to like it. So if you haven't already, go ahead and check that out. We've got a lot of positive feedback from our members. And then, excuse me. Secondly, our other newest release is the new book, our ebook, The Trade Hacker's Ultimate Playbook: 19 Bulletproof Strategies to Trade in Any Market. And you can get this as a standalone on the navigation site, or you can, if you purchase any of our courses on our website, we will give you that ebook for free. So let me give you a quick sneak peek of the ebook. So here's what it looks like. And the cool thing is you can go through and let's say, for example, right now we are in a period of low implied volatility. A lot of stocks are high and we're in a period of low implied volatility. So let's say I found a stock or an ETF or a future or something that I wanted to be bearish on, that I wanted to go short, and I saw that the implied volatility was low. You can simply go to the table of contents and let's say, for example, click on long put vertical. Market's open. We'll jump to the platform here in a second. But if you just click on long put vertical, it's gonna take you right to that page and give you an idea of what the setup would look like. So the market assumption is bearish. We want it to go down. This is best for periods of low implied volatility. Optimal time frame to enter the trade, 30 to 60 days. Looking for a profit target of between 25 and 50%. Downside risk, none. Obviously, if it's going down, we're making money. And then on the upside, we know that our upside risk is limited to the amount of debit we pay for this trade. And when we set this up, the initial probability of profit about 50%. But if you've been trading with us long enough, you'll know that the way that we manage trades, our probabilities are going to be much higher than that. And then it'll give you a visual graph of what that would look like. And this trade setup is simply to buy one in the money put and sell one out of the money put. Also let you know that the time decay can be positive if the trade is going in your direction, or it can be negative if it's going against you. And we always let you know if this strategy is eligible to trade in an IRA or if it can only be traded in a margin account. So this is just a great quick reference guide. A lot of our members, what they're doing is they're just printing this off, keeping it on their desk, so as they're looking for different trades to make, as opportunities present themselves, they can use this as a guide to start placing the trades. So if you're interested, go check that out at NavigationTrading.com. And let's go ahead and jump onto the platform to take a look at what's going on in the markets. So the stocks, the indices are relatively flat opening up here. You can see bonds are down about 0.25%. Oil is up about a percentage this morning. Gold is pretty flat. Silver up a little bit. Natural gas down about 1%. You can see the grains, soybeans, corn, wheat, all continuing to have big moves. Had huge moves up and then a little bit of a pullback, and then it's kind of trading in a range, but big moves over 2% for the most part, around 2% in all the grains. We look at some of the others. FXE down about 0.25%. Nothing moving too much this morning yet. Let's take a look at some of the major stocks, like Apple, for example. Apple's pretty flat. Amazon pretty flat. Costco pretty flat. I'm just kind of scanning this. There's nothing really moving too much. So what I want to do is for our trade of the week, what I want to do is I want to utilize the ebook that I just mentioned. And what I'm going to do is exactly what I just showed you, and that is I want to put on a long put vertical. And the symbol that I want to look at is I want to look at the euro, in this case FXE. I've been looking at this and wanting to get short FXE for quite some time. You know, it had a big rally up here, another rally, and I was looking to get short around this area and thought maybe it had a little bit more to go, pushed higher, and now it's all the way up to almost 113, hitting highs. And so I'm looking for a pullback in the short term. And so with implied volatility under that 50% level, we consider that low IV. So what I would do, as I showed in the ebook, is simply take a look at a long put vertical. Okay, we want to be bearish on this symbol. Implied volatility is low, so we can look at a long put vertical. So if we go to the trade tab, and we want to be between that 30 and 60 days, stay out of the weeklies. So I'd use the one with 53 days to expiration. And then what I'll do is, remember, we want to buy an in the money put, and then for protection, sell an out of the money put. So price is about $112.50 right now, so I want to get about even on both sides of where price is currently trading, and then we can take it to the Analyze tab and adjust if necessary. So let's just choose the 115. So we'll just right click, buy vertical. Remember, we're on the put side here, so we're buying a put vertical. And so, you know, that's about 2.5 points away, so let's choose the 110 as the one we buy, as the one we sell. So we're looking at the 115, 110 put vertical. So we're equal distance away from where price is currently trading. So if we take that over to the Analyze tab, we can take a look at what that looks like. So when you do this, you're simply looking at, like I said, the probabilities are about 50-50, 48%, 51%. Now, I like to, you could do this if you're just purely taking a directional trade and saying, I think this is going to go lower, which is kind of what we're doing here. You could utilize this almost as a short stock replacement. So this is a good trade that you could use in an IRA, or simply just a way to get short FXE. Now, I like to put the probabilities a little bit in my favor, and so what you can do there is you could move this 110 up to, say, 112, and this is just part of the process. You're adjusting your strikes and trying to figure out what fits best. And so now what this is going to do is it's going to give us a probability of over 55%. Okay, so that's increasing our probability of success. What you give up for that, obviously, is the upside is not as much. So we're looking at, with one contract, we're looking at $112 on the upside and $188 on the downside. But what you'll see here is if you move your price slice around, is that watch the theta number. The more it moves in your favor, the higher that theta is going to be. That's the daily decay of those options. Now, if it starts moving against you, that theta is going to turn negative. And so you kind of can understand how that theta will affect your position. But this is the kind of strategy that I want to put on when I'm trying to get short. So we'll have a little bit of a positive theta situation. the probabilities, if we have this price slice at break even, are going to be more than a 50-50 chance of being correct. And remember, we're not going to wait all the way to expiration. These probabilities are based on us waiting all the way to expiration. But when we manage these trades as a percentage of max profit, our probability of winning is going to be much higher. Okay? So I'm going to go ahead and put this trade on and shoot this out to our Navigation Alerts subscribers. If you haven't tried Navigation Alerts, you can still check it out for just $7 for a 2-week trial. And so I'm going to end this recording and get this trade sent out to our alert subscribers. Everybody have a great week of trading, and we'll talk to you next week.